In 2017, Donald Trump entered the White House with a promise to shake things up, to put America first. And within months, the global economy would start to feel the tremors. From sweeping tax reforms to a full-blown trade war with Europe, this is the story of how Trump's economic policies changed the game, for better or worse. Let's start with the tax cuts. In December 2017, Trump signed the Tax Cuts and Jobs Act, the most significant overhaul of U.S. tax law in decades. The corporate tax rate was slashed from 35% to 21%. Individual income tax brackets were lowered. The standard deduction almost doubled. The goal was clear: supercharge the economy, fuel job creation, and bring investment back home. And at first glance, it worked. GDP ticked up, corporate profits soared, and the stock market? It loved it. But the long-term picture wasn't as shiny. The federal deficit exploded, climbing past $1 trillion a year. Most of the benefits went to big corporations and the wealthy, while wage growth remained sluggish. Critics called it a giveaway. Supporters called it a necessary jolt. While the tax cuts stirred debate at home, abroad, another storm was brewing. Trump had a message for America's trading partners. The days of taking advantage of us are over. In March 2018, Trump imposed a 25% tariff on steel and 10% on aluminum, affecting imports from Europe, Canada, Mexico, and beyond. The justification? National security. The EU was not impressed. They fired back with counter-tariffs targeting classic American brands: Harley-Davidson, Levi's jeans, bourbon whiskey. It was a tariff-for-tariff showdown. And it wasn't just about steel. A long-running feud over aircraft subsidies between Boeing and Airbus boiled over, and more tariffs followed. Wine, cheese, olives, even aircraft parts. Billions of dollars worth of goods caught in the crossfire. So who really paid the price? American businesses were hit with rising costs, especially manufacturers who needed steel and aluminum. Farmers lost overseas markets as the EU and China imposed their own retaliatory tariffs. The Trump administration rolled out multi-billion-dollar bailouts for U.S. farmers. But for many, it wasn't enough to offset the damage. Prices rose, supply chains were disrupted, and some companies started moving operations abroad to avoid the chaos. Ironically, the U.S. trade deficit didn't shrink. It grew. Meanwhile, across the Atlantic, Europe was learning a hard lesson. Even allies could become trade targets. The EU began pushing for more strategic autonomy, meaning less economic dependence on the US. They deepened trade ties with Asia. They questioned the reliability of US leadership. And they prepared for a world where America might not always play by the old rules. Trump's tax and trade policies were bold, aggressive, and deeply polarizing. Supporters saw strength. Critics saw chaos. The tax cuts injected energy into the markets, but ballooned the deficit. The trade war challenged the status quo, but at a high cost to American consumers and businesses. But no matter where you stand, one thing is clear. Trump's approach redefined the way America deals with its allies, its rivals, and the global economy. And we're still feeling the ripple effects today. If you found this breakdown helpful, drop a like, share your thoughts in the comments, and subscribe for more deep dives into the events that shape our world.